Hey folks, ever wondered how us small investors can shine in the stock market? Well, hold on tight. I stumbled upon this amazing video featuring insights from the master himself, Peter Lynch. Believe me, he spills the beans on secrets that turn the game in our favor. From the power of understanding what you invest in to the courage to stomach market downturns. And there's more. Lynch drops valuable tips on focusing on smaller companies and mastering the art of riding the waves of volatility. This conversation completely changed my approach to investments. Stay tuned till the end because there's more gold where these gems came from. And of course, if you haven't subscribed yet, hit that button because this content is going to blow your mind. 5. Individual investor advantage. The speaker believes that individual investors have a significant edge over professionals in the stock market. Contrary to conventional wisdom, the dominance of institutions in the market is seen as a positive for small investors. You won't believe the nugget I discovered about investing in the stock market. You see, I was watching a video and the guy was talking about how we, regular investors, have a huge advantage over the pros in this whole game. Seriously! He challenged the idea that institutions dominating the market is a negative thing. On the contrary, their presence is like a little push for us, small investors. Somehow they make stocks fluctuate, offering opportunities in both lows and highs. Another point that blew my mind was the advice from the legendary investor Peter Lynch. He says the key is to know exactly what you have in your hands. If you can't explain to a 10-year-old why you're investing in a certain stock, you better rethink it. Lynch emphasizes understanding companies deeply, knowing what sets them apart from the competition. Man, that makes total sense, right? He even gave a golden tip: focus on smaller companies, often overlooked by Wall Street sharks. These companies have more growth potential, and we can strike gold with them. Now, isn't that something? 4. Peter Lynch's wisdom. The video highlights insights from the legendary investor Peter Lynch, who argues that the average person can do well in the stock market. Lynch's key advice includes knowing what you own, understanding the company's fundamentals, and being able to explain the investment simply. Dude, you have no idea what I found out about investing by watching this Peter Lynch video. The guy is a legend, and he's there, hammering home that we, ordinary folks, can rock the stock market. He gives some advice that's like pearls. Check this out. First, he says it's essential to know exactly what you have in your hands. Like if you can't explain to a 10-year-old why you're investing in a stock, you better reconsider. And I'm not talking about complicated formulas. It's understanding the company's fundamentals, knowing what makes it different from others. But the coolest thing he dropped was about focusing on smaller companies. Imagine that. Those usually overlooked by professional investors. According to Lynch, these companies have much more growth potential. And then I think it makes sense, right? It's like going after the hidden gold in the bushes while the big sharks are busy with the market giants. And you know what's crazier? He says it's not just about having intelligence. It's about having stomach, too. Sometimes what matters more isn't making complex calculations, but having the courage to hold on when stock prices take a nosedive. Look at the example he gave with Meta stock. The company had a steep fall, and anyone who had the courage to hold on saw the recovery later. It's kind of inspiring, right? Anyway, I found Lynch's insights sensational and had to share them with you. 3. Focus on smaller companies. Lynch suggests that focusing on smaller companies can be advantageous for investors. Smaller companies, often overlooked by institutional investors, may have more growth potential, presenting opportunities for substantial returns. Dude, I was watching this thing from Peter Lynch, and the guy dropped a bomb about where to aim in the stock market. He says we should pay special attention to smaller companies. It's like those that stay a bit in the shadows, ignored by the big investors, you know? And his reasoning makes total sense. These often forgotten companies have much more growth potential. It's like finding a hidden gem among the shells on the beach while others are eyeing the big things. What's cool about it is that, according to Lynch, the return opportunities in these smaller companies can be quite substantial. He says while Wall Street sharks are eyeing the big players, we can be there focusing on these little ones and reaping the rewards later. I like the idea, you know? It's like exploring the uncharted territory of the stock market, where the potential for incredible discoveries is higher. After all, who doesn't like a good financial surprise, huh? 2. Long-term approach. Adopting a long-term approach is encouraged, taking advantage of the volatility caused by institutional investors' short-term focus. The example of the significant drop in Metastock's stock price and its subsequent recovery is used to illustrate the benefits of a patient and long-term perspective. Man, you need to hear what Peter Lynch said about this approach to the stock market. The guy gave a super valuable tip. Think long-term. He says all this volatility, caused by institutional investors obsessed with the short term, can be a goldmine for us, the small investors. It's like riding the waves of market fluctuations, you know? I love the idea of not stressing about constant ups and downs. Then he dropped this crazy example of Metastock like a roller coaster of stocks. It had a steep fall and everyone was kind of freaking out. But what Lynch highlights is that those who had the patience to wait, holding on, saw the recovery afterward. It's like playing chess while others are in fast game mode. And in the end, those who are thinking long-term can do well, even when the market is crazy. I think it's a brilliant insight, you know? It's like taking a step back to then take two forward. And that's what I'm learning in this crazy world of stocks. 1. Stomach over brain. Lynch emphasizes the importance of having the stomach to endure stock price drops. Successful investors, according to Lynch, are those who can withstand market fluctuations and resist the urge to sell during downturns, distinguishing between short-term noise and long-term potential. You know, I was watching a talk by Peter Lynch, and he dropped a real gem about investing in stocks. It's more about stomach than brain. I was kind of surprised, but it makes total sense. He says success isn't just about making complex calculations, but having the courage to endure market hits. Having stomach, you know? Like when stock prices plummet, not selling everything, even if that little voice in the back screams, "Sell, sell, sell." Lynch emphasizes that successful investors are those who can face market fluctuations calmly, like a surfer mastering the waves. He says it's crucial to resist the temptation to sell during downturns, and that got me thinking a lot. In the end, it's about distinguishing between the annoying noise of short-term and the incredible potential of long-term. I really like this idea, you know? It's like he's saying that, even with all the roller coaster of the market, what really matters is having the strength to hold tight and not let fear sabotage you. Investing is more emotional than I imagined, and this lesson about the stomach is a real eye-opener. And there you have it, folks. We've reached the end of this incredible conversation about investments with Peter Lynch's insights. If these tips have changed your perspective on the market, imagine what's coming next on the channel. So stay tuned. Don't forget to subscribe to not miss any insights. Give that like if you enjoyed the content, and tell us in the comments what was the biggest lesson you took from this video. Let's build together this community of investors seeking more than just numbers. We're looking for transformative knowledge. Until the next video, may your investments be as amazing as you are.